Today, November 16th, 2025, Bitcoin hit its lowest level since May as a broad-based crypto sell-off takes hold. Cory Klippsten from Swan Bitcoin shares his outlook on what's in store for crypto prices through year-end. Major cryptocurrencies are under pressure in this session. Bitcoin slid to just under $97,000 after at one point sinking as low as $95,000. Ether and XRP both fell nearly 3%. Concerns surrounding Wall Street's AI trade have mounted, with a recent wipeout in once hot tech stocks further spooking investors about elevated valuations. On top of that, renewed unease about the Fed's upcoming rate decision has also added pressure to market sentiment this week. Investors are counting on another rate cut next month to boost confidence, but some Fed members are growing concerned that inflation is too sticky to warrant further easing this year. All of this is happening as a U.S. government shutdown, the longest in history, finally ended on Wednesday evening after stretching on for more than 6 weeks. Looking at the week as a whole, Bitcoin was down more than 6%, and Ether was lower by over 6.5%. Both Bitcoin and Ether are on track for their third consecutive weekly loss and their fifth negative week in the past 6. For Bitcoin, this is the first weekly close below $100,000 since early May. XRP was also down about 1%, marking its second week of back-to-back losses. In a recent interview, Strategy's executive chairman Michael Saylor weighed in on this selling phase. About 2 weeks ago, Saylor predicted Bitcoin would hit $150,000 by the end of the year. Today, he explained whether he still feels that way now. There's an incredible amount of leverage coming out of the system. A lot of liquidations. A lot of the OG holders were selling at the $100,000 level, and so I'm fairly comfortable at this level. I think we'll build a base from here and rally from this point. Obviously, it's tough to make a forecast for the end of the year right now, given what's happened over the past few weeks and especially the shift in the macro environment. But, my view is that Bitcoin is going to outperform gold. It's going to outperform the S&P. It is digital capital. And so, if you're a long-term investor, this is the place to be. Sticking with markets, I spoke with Cory Klippsten, founder and CEO of Swan Bitcoin, about what's driving this sell-off. He also shared his expectations for Bitcoin in 2026 and beyond. Cory, what's your take on this multi-day sell-off we are seeing in crypto? Is most of this tied to wider risk assets? Or is there something inherent to crypto that you're watching right now? Look, I think there's a micro thing right now in just the last week or so where there's a lot of uncertainty. But there's also something broader that we've all been kind of looking at and wondering why this time might be different. In particular, for anyone who hasn't been following Bitcoin since inception, there have been these 4-year cycles with bull market peaks in 2013, 2017, 2021, followed by sell-offs where the price never hit that high the following year. So, the highest price in 2014 was lower than in 2013. The high in 18 was lower than 17. The high in 22 was lower than 21. So the big question is, are the cycles dead? And if they are, why? Now, there's a newer hypothesis that actually dovetails with my own. The newer hypothesis is that Bitcoin essentially IPO'd at $100,000. And I have anecdotal evidence for this. For some reason, that round number has always been talked about in Bitcoin circles since I got into the space in 2017. It was always that number. People would say, how much of your stack will you sell when it hits $100,000? It was just a recurring question. We talked about it, and you'd always have a number you might discuss or you'd say, I'm never selling. But it does feel like it's had more psychological impact than people thought. And a lot of the early holders, who bought at very low prices, have been peeling off a lot of their stack. You could say responsibly diversifying. I think the more likely IPO was actually the launch of the ETFs in January 2024. And that from that point, a lot of the coming bull market was pulled forward. People got really excited. And you saw a much bigger price run-up in 2024 than you ordinarily would have in a 4-year cycle. So, a lot of the growth was kind of baked in. I'll be honest with you. I don't generally do price forecasts, don't encourage trading, and don't trade myself. I just buy automatically every single day and chalk it up as a win because I have more Bitcoin. I certainly had expectations that we'd see something north of $150, maybe $180 by the end of this calendar year, and that looks pretty much off the table at this point. But I also think that because we haven't had a big run-up, the chance of a big crash of the magnitude we've seen in previous cycles is also off the table, and I think the chances of seeing a higher high, so above $125,000 in 2026, is actually really high. Michael Saylor was on today and kind of brushed off the recent volatility, saying it just comes with investing in crypto. We've also seen a rise in outflows for Bitcoin ETFs, but honestly, Bitcoin has been way less volatile than in the past. I'm wondering if you think crypto's relative stability compared to years past will help keep institutions invested in the space rather than abandoning it. Yeah, absolutely. I think everyone is a little more comfortable with a steady, relatively upward climb, single digits, maybe low double digits, something like that every year. It's nice and comfortable and forecastable. And Bitcoin's history of going up 1,000% and then crashing 70 or 80% is not particularly appealing to institutional portfolio managers or asset managers. So I think that thesis is very true. And I think you've just seen a lot more of the Bitcoin volume come onto regulated trading platforms, especially if you also include the paper products like ETFs and futures. It's just that a lot more of the volume is in places that are harder to manipulate. And that was by design. It's been tamed, for better and for worse. And I think we are just seeing that dampen volatility. The other thing is just the law of large numbers. Obviously, it's a lot harder to make something go up 50% or down 30% if the asset is worth $2 trillion as opposed to a few hundred billion. So that's the other thing that's going on. Talk to me about the digital asset treasury trade dynamic. It's been the big talker of the last few months as we've seen pretty tepid flows in the spot crypto ETFs. So, has this introduction of crypto treasuries actually translated to more volatility in the crypto markets? Or how big a role are they playing in the trade right now? Yeah. So, first off, I think the crypto industry and the Wall Street crypto firms trying to label them DATs was just another attempt to bring Bitcoin under the crypto umbrella. After 3 or 4 years of successfully separating Bitcoin from crypto, they saw this Bitcoin treasury company, or leveraged Bitcoin equity play, taking off for Bitcoin and all these companies launching. And I think Lubin essentially realized that if he didn't have something to market like that for Ethereum, then it would just get completely left behind. So they started a new narrative, and he put up all his own personal money. There weren't really any outside investors in that. It was just basically putting Ethereum into the company and then obviously paying Tom Lee a massive amount of money to front it. It was a big coup for them because he's always been a Bitcoin-only guy and a big Bitcoin bull. So he basically got yachts for his great-grandkids by taking the ETH money. But I think it was manufactured and not real. As far as what probably matters to most people and the world of finance in general, I just don't think there's been much new volume from any of these Bitcoin treasury companies. The two biggest haven't closed yet, haven't made any purchases. That's the two Kaner SPACs. But all the assets contributed were Bitcoin, so it wasn't fresh fiat going into Bitcoin for C or CO. And then all the rest of them, whether it's ProCap, Naka, Sequence, Empire, and Strive, the 5 big ones launched this year. None of them have been big buyers of Bitcoin. They're all very, very small, so the impact has been negligible. Now, you mentioned earlier that the idea of new highs for Bitcoin is off the table. So, what should investors expect from their Bitcoin investment through year-end? Yeah, so I don't think a new all-time high is necessarily off the table. We've seen crazier things happen in 6 weeks, often toward the end of the year. So, could we recover to $126,000 or something like that before year-end? Very possible. Again, my base case is that there's a better than 50% chance that happens in the next year. So, sometime in 2026, I think we'll see a new all-time high. And again, that's just a function of us not having had a big price run-up this year. Bitcoin has essentially been stable ever since Election Day last year. It ran up to $100,000 right after the election that same week and has traded a little bit above or a little bit below. in a range between $75,000 and $125,000 ever since. That's basically where we are. And something new needs to happen. It's either got to be some of these so-called OG sellers deciding they've sold enough, so there's no more selling pressure from existing holders, or there needs to be some new source of demand, whether that's just a shift in retail or institutional sentiment, or maybe even, again, nation-state purchases are always on the table. And looking ahead to 2026, what are the themes you're watching for in the crypto market? And is there anything that keeps you up at night that investors should watch out for? So, I'll answer the second part first. And I think in the Bitcoin space, there's nothing you need to worry about. I think it's been in the clear from a regulatory standpoint for 11 years now. So, nothing really concerns me around Bitcoin. On the broader crypto side, I'd say they're all waiting to see what they're going to be allowed to do legally. So they're still trying to figure out what the language is going to be in the Clarity Act, the market structure bill that they paid for by supporting a bunch of election candidates in the last cycle. That's all being fought out, and we'll see what happens and where it lands. But, you've seen the new chair of the SEC, who's extremely friendly to non-Bitcoin crypto, saying that they have ideas they're going to lay out about which types of tokens are actually securities and which ones aren't. They're going to try to clearly define how something starts as a security but then stops being a security at sea. And I think it's true that a lot of the established players that have been around for a long time on the crypto side actually want this regulation. It generally is good for the incumbents and the people with a lot of size to regulate and sort of pull the ladder up behind them to stop competition from coming in. As for how people have generally made money in crypto broadly, they won't be happy. The same actors that have made money in crypto over the last decade, mostly through pump and dumps, it seems, will have a lot of that activity quelled and regulated out of existence. So, we'll see. It may be more than they bargained for. But by the way, I think we're probably on a knife's edge as to whether the Clarity Act even gets passed before the midterms. I think there's a lot of pushback, as you're seeing in the press, even from within crypto and certainly from Democrats, about all the grift and crime that's arisen at the intersection of politics and crypto over the last year. So, assuming this is going to be a legislative priority, and that there won't be fights over it would probably be short-sighted. So there's a lot to keep the crypto people up at night. They have to worry, they have to be in DC, and they have to keep spending money on lobbyists. But as usual, Bitcoiners just don't care. Again, because there's no company that runs Bitcoin.